Visa and MasterCard, I think, are doing the single dumbest thing they could do, creates the incentives for disruption.
Hey everyone, fintech here. So SoFi is currently trading at its lowest valuation since it went public via Chamath Palihapitiya SPAC merger. And I could not be more excited, because as I'll show you in this video, SoFi is a sleeping giant, which has the potential to 80 or even 100x in price as it begins to take on the big financial players, even as big as Visa and MasterCard. So in this video, I'm going to walk through SoFi's three main business segments of lending, technology platform, and financial services, showing how much each could be worth if they hit their ultimate potential, as well as giving an estimate for how much they should be worth 1 year from now. So at the end of this video, you'll know both SoFi's potential to make huge returns in the long run, as well as what I think the stock price should be in the short term. So SoFi is a fintech business, but they are really three businesses in one. It's like the holy trinity of companies. You have their original lending business, which started with student loans, but now offers home loans and personal loans. This is the slowest growing but most profitable part of the business, bringing in around 70% of SoFi's revenue at a 30% growth rate. Then you have SoFi's financial services segment, which basically includes everything they offer in their mobile app: SoFi Money, SoFi Invest, and SoFi Relay for tracking your money. Finally, you have technology platform, which was created from the Galileo Technology Platform that SoFi bought in 2020 for $1.2 billion. At the time, that was just 10% of SoFi's market cap, but with SoFi today at a market cap of $5.6 billion in total, that now represents 20% of the company's total value. Although I think that tech platform is now much more valuable than anyone realizes. So let's walk through each of the three segments now and offer a valuation of the business currently, as well as what it will look like in the long term, and we'll fill in this chart as we go. Let's start out with financial services, which is basically made up of all the services in SoFi's app: SoFi Invest, SoFi Relay, SoFi Money, their SoFi credit card. Now, as this paper from New York University points out, financial service firms pose a particular challenge for an analyst attempting to value them, because regulations, debt versus assets, and cash flow can all be very obfuscated. So to make things simple, we'll value this financial services segment more like a tech company by looking at their number of users on the app and then comparing that to similar fintech companies Robinhood and Cash App. Since all three companies offer investing services, all three companies have grown exponentially over recent years, and all three focus on targeting a younger demographic. We'll then also use that to figure out SoFi's potential value if their app keeps growing the way it has up until now. So right now, SoFi has 3.4, almost 3.5 million app users, which they call members. And because each of their users tends to use multiple SoFi products, they had nearly 5.2 million products being used last quarter. So that would be customers using both the SoFi Invest and the SoFi credit card as an example. So let's compare those numbers to Cash App and Robinhood. Cash App currently has 44 million monthly active users, so more than 10 times as many as SoFi. And here's a weird fact that I found: 81% of their revenue came from Bitcoin last year. They also have 13 million Cash App card users, which would be their version of having multiple products per user. Now, Jack Dorsey's Square actually owns Cash App, so it's a little hard to break out just what the value of Cash App itself is, but since Cash App made around 70% of Square's total revenue in 2021, let's assume that it also makes up 70% of Square's total value. So 70% of Square's $60 billion valuation comes out to $42 billion just for Cash App. Now, Square also has a payments platform similar to SoFi's Galileo Tech Platform, but we'll talk about that when we get to that business segment in a minute. This just means that Cash App is roughly valued at $1,000 per active user. So if you sign up for an app like Cash App, that's as good as money in their pocket, which is why companies like SoFi are willing to give you $25 in a free stock when you sign up using the link in my description. Please sign up. Views are down and I need the referral bonus. Let's also look at Robinhood, which has fewer users than Cash App at 22.5 million users as of Q2 2021. Now, Robinhood is only valued at a market cap of $9 billion, so that's around $360 per user. And that's likely because Robinhood only makes 1/10 of Cash App's revenue, even though they have half their user base. Now, SoFi currently monetizes their app customers a little more similarly to Robinhood than to Cash App. So I think giving them a valuation of $1,000 per user is a little generous, at least today. So for their current valuation, I would put SoFi's app value at $360 per user, or $1.2 billion in total for financial services. But that's just the value today, and personally, I'm more of a long-term investor. So how high could SoFi's financial services segment's value go in the future? Well, SoFi has said their long-term goal is to replace traditional banks, which they see as 500 million accounts across 4,700 FDIC banks that will mostly be grabbed by one single winner in a winner-takes-most market. So assuming SoFi is able to become the Amazon of fintechs, what percent of the overall market can we reasonably expect them to control? Well, let's look at other winners in other markets to help us figure that out. The biggest company in e-commerce in the US is Amazon, which controls 41% of the e-commerce market share. Uber, meanwhile, has 69% of the rideshare market, and Airbnb holds 20% of the entire vacation rental industry. So if SoFi does become the winner in this winner-takes-most market, it's probably not going to get the majority of the market share, but 30 or 40% market share, that seems kind of reasonable. So 30 to 40% of those 500 million legacy bank accounts puts them at 150 to 200 million members, which at current valuation levels of $360 per user puts them between $54 billion and $74 billion in value just for this segment. But as SoFi has grown, they've also started better monetizing their existing users, cross-selling them to new products that produce even more value per user. So in the long run, SoFi could easily match Cash App's value per user of $1,000, which would give SoFi a long-term future value of around $175 billion just for their financial services segment. You could buy a lot of stadiums with that kind of money. And that's not accounting for the cross-selling between business segments like a loan customer that becomes a SoFi Invest customer. But we'll account for that once we first go through this segment separately. Next up, we have one of SoFi's biggest sources of potential growth for the company, SoFi's Galileo Technology Platform.
Visa and MasterCard, I think, are doing the single dumbest thing they could do, but also creates the incentives for disruption.
When Chamath said that, he was talking about how cryptos like Solana were disrupting traditional payments processors. But the statement applies just as much to businesses like Galileo that are disrupting traditional players in the payment space. SoFi originally acquired Galileo as its own company, but they have been working hard to integrate all of that technology into SoFi's ecosystem. In short, Galileo is a platform for enabling digital payments, offering APIs that other companies can use to build their payments processing. This technology services division also holds a lot of SoFi's future potential for creating new products that go beyond anything traditional finance ever even thought of offering. We can kind of compare this to a PayPal or Square's payment processing service. Now, the first thing to understand about Galileo is it has a massive user base and it is growing extremely quickly. Last quarter, they hit 100 million users of their service while growing 67% year over year. Man, if I had $1 for every customer Galileo had, I'd have like $100 million. That's stupid, I can't even see with these. But even more useful than the number of users in this category is the revenue the business segment is producing. Last year, they generated $194 million in revenue, which is more than double what they made the year before. PayPal, meanwhile, which has a little over 3 times as many users, had revenues of $25.3 billion, while Square saw total revenues of $17.66 billion. Now, it's hard to do a straight comparison here because we're dealing with such big companies that have other parts of the business besides payments processing that are making them money. In fact, the payments processing is almost more of a way to get people in the door than a real moneymaker for the companies. For example, PayPal currently has a market cap of just under $100 billion, while Square is sitting at around $60 billion, but those include the entire value of apps like Venmo and Cash App as well. But since we already made a rough calculation of Cash App's value, we can subtract that to find the rest of Square's value. So if we subtract out a $42 billion valuation for Cash App from Square's total $60 billion valuation, that leaves $18 billion for the rest of Square. Now, yes, that's a pretty rough estimate, but like I mentioned before, this is a smaller segment for SoFi, so a little inaccuracy here shouldn't swing the numbers too much. And for the long-term potential, we really just need an order of magnitude estimate anyway. There's no need to boil the ocean when you can swim across, or whatever the saying is. So Square's revenue, excluding Cash App, comes out to $5.3 billion. So if we take the $18 billion valuation of their payments processor, they're seeing a price to sales ratio of 3.4 today. If we apply that valuation to SoFi's Galileo tech platform, so we multiply Galileo's revenue by 3.4, it comes out to $659 million in value, which isn't really that high. But remember, the technology platform's real value is in the potential for it to generate returns in the long run. And while we can't determine what new product SoFi will launch in the future, we can look at the trajectory of Galileo's growth and see where it leads. This business segment is growing at 67% per year right now, and that's not accounting for the value they are starting to drive to SoFi's other business segments. For example, SoFi could offer a credit card via the app that is powered by their own payments processor. Or SoFi could start offering a buy now, pay later service where you buy something with Galileo, then have the option to pay it off over time as a microloan with SoFi lending. The real value here is using the technology platform as a lever for other parts of the company. So in a future scenario, I see no reason that SoFi couldn't match Square's current valuation of $18 billion for its tech platform. So for the technology platform's potential, we'll put $18 billion for now, which I think is conservative, especially compared to PayPal's $100 billion market cap, but we'll revisit that at the end when we take into account SoFi's cross-selling abilities as well. Which leads us into SoFi's largest and most profitable segment today, lending. Now we can value this segment by looking at another startup company called Lending Club. Now Lending Club's revenue for 2021 was $818 million. And while that's not 100% lending revenue, it can give us a starting point for comparing to SoFi. Lending Club's current market cap is $1.5 billion, meaning they are being valued at a price to sales ratio of around 1.8. They are also growing at 37% per year. Now let's look at SoFi's lending business. They're growing at a slightly slower speed of 30% per year, and they saw $760 million in revenue just from loans last year. So if we take Lending Club's price to sales ratio of 1.8 and apply that same metric to SoFi, that would give us a current valuation for SoFi's lending business of $1.37 billion, which completes our chart here. So in terms of their value, ignoring SoFi's future plans or ability to grow, when we add up the valuation we came up with for each segment, $1.2 billion for financial services, $659 million for their technology platform, and $1.37 billion for lending, we come up with a total value for SoFi of $3.22 billion. But wait a minute, SoFi is currently sitting at a market cap of $5.3 billion. So am I saying they're overvalued? Well, no, I don't think so, because I have money invested in the company. What I am saying is that would be SoFi's value if it were 3 separate companies and it wasn't growing. But SoFi is one company being driven by one goal of taking over the legacy banking market. So how do we value that? Well, SoFi themselves show how their app acts like a top of sales funnel, capturing new customers and transferring them into lending, where SoFi makes their real money. They call this their financial services productivity loop, and this vertical integration is the engine driving SoFi's success. When SoFi captures a lending customer, they on average make around $800 in profit over that customer's lifetime. But when SoFi captures a customer through their app before transitioning them to lending, their lifetime value doubles to $1,600 per customer. So the fact that SoFi, 1, has a huge customer base of 3.5 million members to offer loans to, and 2, those loans are twice as valuable as anyone else in the industry, that can easily double or triple SoFi's value as a business, which puts my estimate of its current value around 50% to 100% higher than its current market cap. And in the long term, the potential is even higher. Let's finish up this chart of SoFi's potential valuation by filling in the last spot for lending. Looking at the lending market as a whole, the private student loan market had $10.4 billion in loan originations annually before the shutdowns. We can add on the personal loan market, which was $81 billion per year according to SoFi's competitor Upstart. These are 2 of the biggest parts of SoFi's lending business, but SoFi also offers mortgages, which adds on an additional $4.5 trillion in total addressable market. Now today, the largest mortgage originator is Bank of America, who writes $78 billion in loans per year. So if they make just 4% on that, that is around $3.1 billion in revenue for them. So if SoFi can simply match a legacy bank like Bank of America, that is $3.1 billion from just mortgages. Now tack on all the other markets. Well, SoFi already has around 75% market share in student loan refinancing, so assuming they could reach this same number in originations for student loans and personal loans, that would be an additional additional $68.5 billion in originations, which at a 4% rate would give you an additional $2.74 billion in revenue. So add up all the potential revenue from all three lending markets, student loans, personal loans, and mortgages, and you get a total lending revenue of $5.8 billion, or around 7 times more revenue than SoFi has right now. That would give their lending business a total valuation of $1.37 billion times 7, which comes out to $10 billion. So let's add a future valuation of $10 billion for lending, and that is conservative since lending companies are being valued very cheaply by the market right now. But we're not quite done. We will need to factor in SoFi's productivity improvements, which we before said act as a 2 or 3x multiplier on their value. That brings SoFi's total potential future valuation to between $400 billion and $600 billion in the future. That would be an 80 to 100x increase from its current price, which might seem insane at first, but that's around the size of the largest financial companies today. And that massive potential is why I invest in SoFi. But if you haven't yet, make sure you sign up for SoFi using the link in the description. You'll get a free stock and you'll help SoFi get one more member. Don't forget to like and subscribe, and I'll see you next time.